we are near the end of the war on gold because they've lost the war. Fiat currency, central banks, they've lost the war. And I think it's going to reflect itself very soon with a ballooning or rocketing, not ballooning, but rocketing price of gold and silver for that matter. Silver will be even crazier. And I think having some physical gold and silver will go a very long way.
Gold has outperformed all other asset classes in the current calendar year so far, maintaining its physical allure and generating substantial returns. According to average inflation figures, the US dollar has lost 25% of its purchasing power over the last 4 years. The average price of gold in 2019 was $1,393. Today, gold is roughly above $2,100 per ounce. Gold has risen approximately 50% since 2019 and has outperformed the purchasing power of the US dollar by more than twice. Renowned financial analyst Mario Innecco highlights the persistent strength of gold since its low in 1999, noting its rise despite increasing bond yields. Mario Innecco predicts that the end of the war on gold is near, with central banks losing control over fiat currencies, leading to skyrocketing gold and silver prices. Major nations, including China and Russia, have been striving for years to end the dominance of the US dollar in global trade. This effort has intensified recently, especially after the US froze Russian foreign assets, leading to a loss of confidence in Western financial institutions. Based on his observation, Innecco explains that excessive money printing and borrowing have led to massive debt accumulation without a precious metals standard. As a result, there is decreasing demand for US, UK, and EU debt. No longer constrained by the limits imposed by the gold standard, the US government rapidly increased its debt. In 1971, US debt was $400 billion. In 2024, it reached $34 trillion, or 120% of GDP. Based on the 35-year graph, national debt has increased rapidly on average, even when it is priced in gold. This should be cause for alarm. Debt is increasing rapidly, and gold is underpriced. This trend signals that gold will re-establish itself as a reliable safe haven amid an impending currency crisis. Now, we present the clips of Mario Innecco's insights from his recent video. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I want to show you the chart of gold going back to around the mid-90s because it's really interesting. This article was, this was the weekend FT on July 10th, July 11th, 1999, as you can see here. So virtually a quarter of a century ago. And bar chart actually has the low on this chart, the low for gold, as being August 1999. A month later, gold bottomed and has never seen that price again in the last 25 years. And that price was a low of $252, as you can see here. So, as I said, I think it was time to bury gold literally if you had some to keep it safe. And I think it's still time to bury it now with your dirty man safe. Dirty man safe wasn't around 25 years ago. So I think the FT was wrong, of course, because they meant it as a pun, bury it as an investment or a mode of savings. And notice, like they always use the fact that gold doesn't pay any interest. Well, and that higher bond yields are bad for gold. But as we've seen since 2021, bond yields have gone from below 1%, sometimes even negative, to around 4 or 5% now. And despite that, gold has kept going up. And why is that happening? Here, I'm going to cover a bit more why the war on gold is almost over. Well, the reason why I think this is happening is that investors and even central bankers, especially central bankers from outside the G7, from the Western world, are realizing that the current post-Bretton Woods monetary system, the dollar standard, or the petrodollar, if you want to call it, is on its last legs. Why is it on its last legs? Well, because under a fiat currency system that doesn't have an anchor to the monetary system, like a gold standard or just a plain gold-backed system or silver-backed system, bimetallic. It's very easy for governments and central banks just to print the money, borrow the money, especially when you've done like over a decade of money printing or QE, trillions of dollars to keep interest rates low. How do they do that? Well, the central banks create reserves out of thin air, which is called really money out of thin air, to buy government bonds. When you buy government bonds, it raises the prices and the yields go down. So you can keep you can keep people that are in debt refinancing, and you can keep the Ponzi going. It's a debt-based system, but now we're coming to a point where there's so much debt they can't stop. And the problem with that is that we've seen in the last couple of years that bond yields are rising, and they're going to continue to rise. And why is that? Well, because the rest of the world is gone off buying U.S. treasuries, because the United States, not just the current administration, but the previous administrations, have used the dollar as a weapon. So there's a lot less demand for U.S. debt, and there will be a lot less demand for UK debt and EU debt. That's why I think the war on gold is almost over. And we're seeing that central banks like the Bank of China, People's Bank of China, the Indian central banks, the Russians, and many others have been buying gold hand over fist since 2022 because they know what's coming. They can see the collapse of the currencies.
Mario Innecco explains that investor confidence in fiat currencies erodes during societal, economic, financial, and political upheaval periods. He predicts that this growing distrust is approaching its apex, signaling the end of the war on gold. Concurrently, Innecco mentions that gold's recent breach of a significant resistance level established since August 2020, signaling a pronounced upward trend. In fact, since the creation of the Federal Reserve in 1912, the US dollar has lost nearly 98% of its purchasing power. The gold price, on the other hand, has multiplied 100-fold. This may seem like a lot, but gold has just maintained its purchasing power. Today, 1 ounce of gold purchases approximately the same goods and services it did 100 years ago. Gold hit an all-time high nominal price in April of 2024 amid rising asset prices across the board. But gold's inflation-adjusted high was still seen in 1980. Regarding the ongoing uncertainty, Innecco's advice underscores the stability and security that tangible assets like gold and silver may offer in the years ahead. Let's get back to the interview.
There's societal, economic, financial, political mayhem. Well, investors lose faith and confidence in the issuers of the currency, and they don't want that currency. And that's why I think the war on gold is almost finished. And the charts are telling me this as well, especially this long-term chart that I showed you with the low in 1999. And why? Well, because we've broken out of that kind of a triple, almost quadruple top that gold made from August 2020 to when was it that we broke that? Well, it was early this year, February and March. Actually, at March, we definitively broke through there. So let's compare the chart from the last 25 years to what happened to the value of one gold mark and paper marks back in the 1920s. And they look very similar, as you can see here. There's a top just about above 10 paper marks in the beginning of 1920. And then there's consolidation up until, the end of 1921. Then it breaks out. Then it comes back down and then consolidates a little more. And in the middle of 2022, it takes off. And this chart, of course, is a logarithmic chart. But you can see that we went from under 100 paper marks to over a trillion in a matter of a year or even less. That's the hyperinflation. And I think we are very near that point, this phase transition when it takes off. Am I saying we're going to see $1 trillion gold price? Maybe not. We might get to 10,000 or 100,000, and then the whole system will implode, and they'll try to come back and say we need to go back to gold. And why am I saying that? Well, because even the Dutch central bankers are admitting that. Back in May of 2023, the Dutch central bank said, gold is the ultimate anchor of trust. If the entire financial system collapses, you still have the gold, and the gold retains its value. So the central bankers know it. Why don't they tell the public about this? Well, because they don't want you to protect yourself financially. It's interesting how this chart of gold marks and paper marks is very similar to what's been happening since 2011. Of course, it's on a bigger time scale, longer time scale. You can see that we made the top there just above 1900, which to me corresponds to that top just above 10 in the beginning of 2020. And the consolidation then took about 2 years. But here in present day modern world, it took about 10 years. It's called a fractal, but I think the same will happen. And I think that's why we are near the end of the war on gold, because they've lost the war. Fiat currency, central banks, they've lost the war. And I think it's going to reflect itself very soon with a ballooning or rocketing, not ballooning, but rocketing price of gold. And silver, for that matter. Silver will be even crazier. And I think having some physical gold and silver will go a very long way.
In recent years, gold has continued to grow, reaching new highs, nominally speaking. Given the ongoing shifting trends in global finance, do you believe investing in gold and silver is prudent to safeguard your financial future? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.